Market color English, positioning, skew, volume and flow explained. Welcome. Today we're decoding market color. A quick professional snapshot of what's moving and why. Think of it as the headline you'd share on a trading floor. Concise, insightful, and immediately useful. We'll focus on positioning, skew, volume, and flow, the 4 pillars pros use to describe market tone in seconds. If you're a non-native speaker, this toolkit helps you sound precise and confident without extra words. By the end, you'll be able to write crisp updates like a dealer, short, sharp, and rich in signal, not noise. Let's make complex market talk simple and practical. Start with positioning. Who is long, who is short, and by how much? Net long means exposure benefits if prices rise. Net short benefits if prices fall. Why it matters. Crowded positions can snap back fast when people rush to exit, while clean positioning leaves room for a trend to extend. Look for clues in notes about dealer versus client positioning. Dealers' long gamma or clients adding downside hedges tell very different stories. Example: clients are net long EUR, dealers are short gamma. Watch for sharper intraday swings. Positioning frames the next likely move and its fragility. Volatility describes how much prices move. Implied volume is what options pricing suggests about future movement. Realized volume is what already happened. The gap matters. If implied is far above realized, the market is paying up for protection or potential. High volume often signals uncertainty or strong hedging demand. Low volume suggests calm or complacency. Use clean language. Volume bid means buyers lifting offers and volume rising. Volume offered means sellers pushing it lower. Volume stable means little change. Example: front-end UR volume offered as realized stays quiet. Back-end stable. Skew shows which option tails are more expensive. Put skew means downside protection costs more, typical when investors fear drops. Call skew signals pricier upside, often in commodities or hot themes. Risk reversals, RRs, capture skew direction. Positive RR favors calls. Negative favors puts. Describe changes clearly. Skew steepening means the difference between wings is widening. Flattening means the gap is narrowing. Neutral means balanced. Example: equity index puts skew steepening into earnings. Investors paying up for downside hedges. Skew tells you where fear or greed concentrates. Flow tracks the size, side, and frequency of trades. It answers who's active, how big, and in which direction. Real money, pensions, insurers, tends to trade larger, more patient, often aligning with fundamentals. Fast money, hedge funds, HFT, moves quickly and can flip positions, driving short-term swings. Report it simply, seeing better buyers means net demand. Better sellers means supply. Two-way flow means balanced. Add color with size or tenor when you can. Example: two-way in 1 euro week, but better buyers after data. Flow reveals conviction and timing. Let's combine the elements into crisp, tradable lines. Example 1. Street still long gamma. Volume offered front end. Translation: dealers, hedging dampens moves and short-dated volume is under pressure. Example 2. Put skew steepening as hedges picked up. Investors are paying more for downside. Risk aversion rising. Example 3. Two-way flow. but net better buyers in USD JPY. Activity on both sides, yet demand dominates, hinting at upside support. Aim for sentences that state what changed, where on the curve, and who's behind it. Fast to read, rich in signal. Be specific to earn trust. State tenor, strike, and size when possible. 1 MUSD JPY 151 calls, medium size, multiple prints. Avoid rumors. If uncertain, flag it. Unconfirmed, hearing, color only. Add context so readers can act. Catalyst, data release, earnings, central bank. Time window, London morning, NY close, and impact, gap risk, gamma effects. Example, ahead of CPI, 1WEUR volume marked higher, buyers in downside puts. Clarity keeps your note professional. Hedging language and context keep it honest and useful. Steal these concise lines for your next update. Positioning is stretched/clean/mixed. Great for signaling crowding risk. Volume marked higher/lower. Demand in wings. Says direction and where the action is. Skew rich/cheap. RR widening/narrowing. Quick skew valuation plus movement. Flow light/heavy. Interest from real money. Volume plus participant type. Mix and match. Positioning stretched. Put skew rich. Volume marked higher. Heavy flow from real money. These phrases keep your color tight, precise, and instantly readable.